And already welcome to the second module. And in this module, we will take a look at our charts together. We will get into chart reading. You will learn how to understand any price chart. We will cover the different market phases. We will learn how to analyze trends and waves. We will take a look at price action trading, pure price action trading. We will also take a look at the most important indicators and how to use them. And I will also give you a quick introduction into a trading strategy. So first of all, when we start, we have to make us clear that there are only so many things that a price can do at any point in time. It can only either go up, it could go down, or it can go sideways. There's not much more to that. The price can only do one of those three things. If you think about it, of course, it can go up and it can go down with different intensities. It can go sideways with different lengths or for different time horizons. And that's a given. But at the core of that, it can either rally, it can sell off, go down, or it can move sideways. And once we look at our chart analysis together, we will be able to see that this is true in any market, in any time frame, and at any time in price history. So in this video, we will take a look, or in the second part, I will take a very in-depth look at the different market phases. And then in the next video, we will take a look at the trend analysis in depth, where we will take a look at impulsive and corrective waves and how to analyze the trending phases in more detail. So in its purest form, chart analysis focuses on pure price, and we only look at the price information on our charts. We don't use any tools besides the regular charting principles. And sometimes this is also called naked trading because you just look at naked price charts. In my opinion, it is not the ultimate answer, but it's a good starting point. Later, we will learn how to use and add different confluence tools, different confirmation tools to our charts to improve our chart reading and to improve the way we time our trades. But understanding price at the first layer is very, very important. My and our approach to trading, I just want to quickly lay it out for you so that you know what my mindset is and what you are going to learn. In my opinion, price is king. So it is not necessary to overload your price chart or your charts in general with too many tools, too many indicators. Any or all information is visible at price. We have to understand that price, the way a price moves, it is telling us a story, because let's think about it. Why is the price on our charts moving? It is moving because the buyers and the sellers, the different banks, hedge funds, central banks, and corporations interact with each other. The price is driven by humans, by emotions, by needs and wants. So it is not necessary to, at the first layer, have too many tools. When we understand why are the buyers interacting with the sellers, how are they interacting, who is at the moment stronger, and that's all we can read from the price charts, as we will see in the next few videos. It is very important to understand that the price is driven by the buyers and the sellers. And once we understand how to read this story that price is telling us on the charts, we can make very, very effective trading decisions. Later on, we will use a few selected indicators and tools to make better trading decisions. We will only use certain tools in certain conditions that we will explore later. And we will combine the two parts, or the best parts, of price action trading and limited indicators to form a very robust trading system to then find the best trades week after week. And this is a very powerful approach. And although you might think, okay, this sounds very, very basic for now, yes, it is, because we are just getting started. So stick with me, and in the second part of this video, where we will pick up now shortly, we will take a look at a few market phases, and we will start with basic chart reading. So when we are back now at our price chart, you can already see the different market phases. You can see here price moved up. This is what we would call a bull market or a rally. Then at the top, prices turned. We moved down. This is what we call a downtrend, a bear market, or a sell-off. And then here on the right-hand side, you can see that prices have more or less moved sideways in a range market. But in the range market, you can also see that prices go up and down. There are small rallies and small sell-offs. And then finally, after every range, there is usually what we call a breakout, where price goes from ranging to either making a sell-off, that's what we see right now, or starting a new rally. And you can see that over and over again that the markets alternate between the different market phases. So you can see here we had this sell-off. In the sell-off there were small range markets where prices just went sideways here as well. Then after the sell-off stopped, we had this range here where we just go up and down, up and down, up and down. And then after the range was finished, then we had a little rally here as well, where we broke out again, we left the range, we made a new rally, we sold off, and then so on. And in technical analysis, we can use trend lines and support and resistance levels. I will show you that in a later video, but for now it is just enough to know that how we draw them. So here in MetaTrader you can use the trend line tool. It is here at the top. If you click it, then you have selected it, and now you can use it on your chart. You just click to the origin, then you can see that you can draw this trend line here. So we click at the origin, then we look at the price action and the price direction, and you can see that if we use this trend line, then we can really nicely see how price goes up above this trend line. And once price breaks this trend line, then we start this sell-off here, and we can do that again. We use a new trend line, we click at the top, we drag it down. You can see that depending on how you draw this trend line, you can see that price is going down. And once price breaks above this trend line, you can see that we are first entering this rally here, but then very shortly after we are entering this range market, and we can do that again for our range market. So you can see here in a range, we said we go sideways. And you can see right now the price action is very sideways. We have a top and a bottom of the range, and you can see that how we use the technical tools such as trend lines to analyze markets. When they go up, they go down, we can look for the break, and then with this range market we can see how we have a top in the range, we have bottom at the range. And now when price breaks out of this range, we do start a new sell-off and a new market phase. And I just recommend that you go through a few price charts. You can draw your trend lines for yourself to see that this pattern actually repeats itself over and over again. So you can see here again we have a trend line and a horizontal trend line. In that case, we have a top to this range. Then we can also find a bottom to the range, which can be anywhere here in this area. So you don't want to be too precise. I will show you later how to draw trend lines the right way. I have an own video about this, so don't get too hung up on this. Just try to, for now, see how the different market phases alternate, how you go from downtrend here to sideways, then you break out, you go higher, then you break low, you go lower, and so on. And so you can see this across all the time frames. I suggest you start here with the daily time frame, and the reason is that on the daily time frame you usually have less noise, everything moves a little bit smoother. And when you look at the 5-minute time frame, you can still see all the different market phases, but at the same time you can see there are something we call gaps here. We will get into this later, and everything moves a little bit more hectic. You have a little bit more up and down, and also things can change quite fast, but nevertheless you can see how all the different market phases change over time. Again, when we look at the 5-minute, we can still do our task. So you can see we have been in this uptrend. We broke the trend line, we went down a little bit, not that much, then we were in some type of a range here where we moved just sideways. We have a top and we have a bottom, then we broke out, we made a little bit of a sell-off, a small bear market. Then after this was over, we went higher, then we had this rally. At the top of the rally we have another range before we then broke lower. And you can see even on the 4-hour, even though it's a little bit more hectic, you can see this pattern over and over again. And keep in mind, this is a very basic, this is the first layer of price analysis. And later I will show you how to time the trades, how you can actually know when price is going into a rally to a downtrend, and from a downtrend into a rally. We will look at those points where the powers shift, where one market goes from one period to the next, and this can be very profitable opportunities in your trading. And I will show you exactly how to use different tools to identify profitable trading opportunities to get into a trade by using this understanding and taking it one step further. And for now, I hope you can play around a little bit, use the trendline tool, make sense of the markets here a little bit, try to understand how ranges and the market and rallies and downtrends change over time. And then I will see you in the next video, where we will talk a little bit about wave analysis and get into more specifics as well. Now we will start looking at trend analysis in a deeper way, step by step. And first we will understand the different building blocks of trends and any price movement basically. So when we look here at a chart, we can see that although the market is moving down here and it is moving up, it is never really moving in just one straight line. It's always a back and forth. In trading, we call this waves. It has nothing to do with maybe waves concepts that you have heard about, such as Elliott waves or Wolf waves. Waves are just basically how the price moves. It's the constant up and down of price movements. And when the price moves into the direction of the trend here, so the trend is obviously here downwards, how we determine the direction of the trend, that's something that we will learn in the following videos. But when we are in a downtrend, we call the trends or the waves and the price movements that go into the direction of the trend, we call them impulsive waves, because they move into the direction. So in this case, the waves that go to the downside, for example here, and that's a good lesson. So if you use the line graph, and you can see that is here a continuous graph, you can just right click on it, go to the settings, parameters, and then here this is the box. You can untick it, and then it will turn into just a smaller graph. We can also adjust the thickness, and now we have a small graph line. So the trend moves that go into the direction of the trend are called impulsive waves. So here and here, for example, and so on and so forth. So here we do have quite a few impulsive waves that continue always the trend direction. So let me just mark it for completion. And in between those moves, you have little periods where the price is going against the trend direction. Those are called corrective waves, as the name suggests. They go, there are little corrections where the price moves a little bit into the opposite direction. It is very important to understand that, especially once we are in a trade, we need to be patient with our trades, because the trend and the price will never just plummet or spike up to our take profit order immediately, but there's always an up and down, a constant flow between the buyers and the sellers. And once we are able to read those market clues, how we read the corrective and impulsive waves can help us a lot. So for example, here we were in the downtrend and the market was selling off. That's it was a good downtrend, but then here at the bottom something is changing. Whereas previously the price moved down here quite effortlessly, here at the top or here at this point something is changing, because suddenly the price was not able to push lower here anymore. We see that first of all this will look like a corrective wave, just like it has here, but then something is changing, because suddenly we are breaking above the previous highest point. So we have here our previous corrective wave, and this is the price is stalling here. You can see that here on this corrective wave, it already seems quite long. So for a corrective wave, when we compare it to the previous corrective wave, it already seems a little bit long, a little bit too long for the sellers. So if this is really a downtrend dominated by people who want to drive the price lower, then the buyers should not have so much control over the price. They should not be able to drive price as high. So this is the first important clue. And then once we see that the power and the balance is shifting, suddenly the waves to the upside are becoming longer than the waves to the downside, then this should really set your alarm bells ringing, because now it means that the powers between the buyers and the sellers are shifting. Now suddenly the buyers are able to push price quite high, whereas the sellers are not really able to push price low anymore. So this is a turning point, and we will observe them later in much detail, because they are very important clues about the market structure. Once we see that the market is going from a seller-dominated market where the price waves that go down suddenly are not stronger anymore, and suddenly the waves to the upside, they become longer than the downtrend waves, this is where the market will go from a downtrend to an uptrend. We can call them transition phases, and there are many patterns that we will learn later on how to trade such a market. So you can see, as long as the impulsive waves are stronger than the corrective waves, you are in a downtrend. But suddenly, when you see that the trend waves are shifting a little bit the direction, then you can see something here is not quite right. And this is something that you will repeat and you will see over and over again. You can see already this is a little bit of a different type of market, but it's clearly shows the same. You can see the market here started rallying, started going higher quite easily and quite fast. But then what is happening here? Something is completely changing. Whereas the price was moving higher here quite easily, here it just drifted off. The buyers were not able to push price higher as easily anymore, and the market was here barely making new highs. So you already can see that the buyers are not super interested in this market. Then this is a pattern which we will learn later on. It's a very important one. It is what we would call an exhaustion spike, where the market tries to make one last push to the upside, but it fails and immediately goes down. And look at what happened previously. You can see suddenly we see quite a strong of a bearish correction wave to the downside. And this is already something that should set your alarm bells off here. A very long correction wave after this very slow uptrend here. Then we have our exhaustion push where price tries to push higher, but immediately gets reversed. And then here you can see now is the time where the sellers are really taking over, and the new downtrend is starting here with this long corrective or impulsive wave now to the downside. No real buying interest is here anymore in the market. This is something you will find everywhere in the market. We will be able to dissect almost any price chart using this principle. You can see a very strong move to the downside, followed by a little bit of a weaker move, but still we are moving lower. Then here another push to the downside, and then here again, you notice what? Yes, that's the exhaustion push. The price tries to make a new low, tries to push lower, but it fails. And then here we see now one normal correction wave, nothing too much, but we don't see that the price is impulsively making a new impulsive wave. But here you can see now the price is breaking higher. We are breaking into new highs. That is a concept that we will explore in the next video, where we'll cover swing points very in depth. And now the market is moving higher again. And the uptrend waves are higher. Okay, we see a strong corrective wave, but afterwards immediately the buyers return and continue the wave to the trend to the upside. One last final example maybe, and then I think it should become clear what we are doing with corrective and impulsive waves, and we will build on this foundation later on. You can see here strong uptrend, very strong impulsive waves here, and you can see how we can nicely describe such a market, even though here is a little bit of a period where the market is not continuing its direction immediately. You can see, even though this seems like a deep and very long correction phase, we are never really breaking here below this previous point, which is a very important concept that we will learn later on. And you can see once the market faces such an area where the buyers took over previously, here again the buyers step in at the previous price once again. They see that now the price is low enough for the buyers to become interested again. And then here we start this new trend wave. Almost no selling interest here whatsoever. Very good impulsive trend wave. A deep correction wave, but compared to this one, not too much. And that's also one thing that is very important. The price is very dynamic on your charts, and No one price scenario will be comparable to the next one, and you always have to set it into relation to what you have previously seen. So for example, this means here we have quite a deep or quite a long impulsive trend wave to the upside. This trend wave seems to be quite long to the downside, or this correction wave, if we would compare it to what we have seen here or here. But in this context here, it's not really too frightening, I would say, because this is quite short here compared to this long trend wave. So the price will never just shoot up in one straight line, but it's normal to see this back and forth, and you have to put it into relation. Then we see here the price is moving up very, very strongly again, but now something here is changing quite clearly. After this point, the buyers were never able to continue the wave to the upside, and now it looks quite different what we are seeing here. Now compared to this trend wave, now this one looks much, much deeper than what we have seen here previously. So you always have to put it into context, and I think it becomes clear here now. This next wave to the upside is even shallower. You can see that although the buyers try to push higher, they never really can outperform this previous correction wave here to the downside. This is the first warning signal, and then you can see here now the sellers are really stepping up here, and now the trend direction is completely turning to the downside. And you can see what happened. The price is falling and falling and falling afterwards. So just as a little exercise before you go to the next video, I would suggest that pull up any time frame, any chart, and look at the wave, the corrective and the impulsive waves move. Look at the relationship, how deep certain correction waves go, how long certain impulsive waves go. What does it tell you about the buyer and the seller dynamic? And of course, not always will those charts that you find look as pretty as they are here in my example, but this is one concept which we will call, or which is called market selection, where we distinguish between clean and messy charts. It is a very important concept, so that every week we can find the good markets. We stay away from the markets where we cannot make sense of charts. So don't get discouraged. We will learn this in a later video where we will cover exactly when do we analyze a chart, when is a chart not giving us a good signal. So first of all, what is now important, that look for nice trending phases on your charts. Try to analyze them with the concepts that you have seen here in this lesson, and then I will meet you in the next one where we'll take it one step further. So we have learned now about impulsive and corrective waves, and I hope you practiced your new knowledge a little bit to analyze your trending phases a little bit. And now the next concept that we will take a look at is called swing points. And swing points are the ending and the beginning phases of your corrective and impulsive waves. So for example, here on the left hand side, you can see we are in this downtrend, and at the end of each impulsive wave to the downside, we have here a point. Let's just quickly use another color so that we don't get confused here. And in technical analysis, we call those points here at the bottom, they're called swing lows. And conversely, the points here at the top, then at the end of a corrective wave, is then called a swing high. So you can see how swing highs and swing lows make up your charts and make up your trending phases. So you can see here, we can often here pretty nicely describe a trend with our trending waves and also with our swing points. And later on, especially when we take a look at our different patterns, and when we look at head and shoulders, wedges, when we look at double tops and triple tops, how we time our entries, then this is a very important point. But already here at this point, it is very important and it's very helpful to see. So for example, in a downtrend, the classic Dow theory, which is a technical analysis concept, which has been around for many, many decades. It has stood the test of time, so it's still valid today. It says that during a downtrend phase, the most important principle is that the market is making lower lows and lower highs. This means here, so when we look at the swing points, the swing lows, they are always going lower, lower, lower. We don't have any real swing low where the market is breaking this rule. Until here at this point, you can see after we make this strong uptrend impulsive wave, we see that the market is making a lower low. And here at this point, when we look at this area here, let me get rid of the red one, then we can also see that the market is violating, okay, let me redraw them. So we have our swing low, we have a swing high here, then we have our first, we don't know it at this point that this is going to be a first higher swing low, because we need to wait until price is also making a swing high. So at this point, here is where really the new trend is started, because when we break here at this point the previous swing high, we are also breaking this swing high. So now we are making higher highs and higher lows. This is a very important point where the market is really transitioning from lower lows and lower highs to higher highs and higher lows. So this is a transition period where a new trend is initiated, because the lows and the highs are shifting here the way they are forming on our charts. And then you can see here, as I mentioned, this uptrend here was initially quite strong, but then the strength dropped off, and we can see that already here when we just look at how the lows are forming. This is a very interesting trend and a very interesting pattern here. So here you can see we have here where the highs are moving higher quite quickly. So the distance between the different swing highs is quite substantially, swing lows, sorry. But then here something is changing and the market is a little bit rounding off here. As we can see, the lows are not able to move higher as easily. The distance between the lows is becoming shorter, but at the same time here also the distance between the highs is much shorter as well, until here at this point the price is almost not able to push higher. This is then even what we can call a consolidation, or maybe even a range market after this trend. Then we see here this last little exhaustion push and then the complete trend reversal. And any chart can really be explained with swing highs and lows. It might sound a little bit basic at the beginning, but you will see that this is one of the most important principles when we get into more the trade timing, how we find the best trades, because it really gives us a lot of information at one glance. So here again, I'm marking the swing highs and lows first, and then you can see here on the left hand side, we were starting with this downtrend. We make lower lows here at the bottom. The lows are quite far away from each other, which means that the sellers are always able to push price lower easily, until here something is changing. The market is staying here for quite a while, until the market even breaks out and is making now a higher low and a higher high. And you can see how then this sets off this new trending phase. We can take a look at the new market, and this will be always the case here. So we are starting here with a new trending period. The market is coming from a downtrend, and now here it is moving higher. We have our swing lows at the bottom. Just looking at the swing lows, we have it here, then here our last swing low, and then something here is breaking this trend structure. So the market is moving higher and higher and higher. The swing lows are always respected. Even here we can see, okay, although we come quite deep with this correction wave back into the previous swing low, we are not violating it. We are not breaking below this swing low, which is a signal that the sellers, they might be interested in the market, but the buyers still were able to step in at this previous point and continue then the wave to the upside. However, at this point here, it is very different. We have our swing low, then a last push to the upside, and then here we break our swing low. Once an uptrend market is breaking a previous swing low, it is already telling you that something here is not really agreeing with your trend direction. And then you can see once we fall past the previous swing low, the market is making a very strong move to the downside. We have here a wave to the upside, but we are not even coming close to this last swing high. So this is then where the new downtrend is really confirmed, and you can see afterwards the market has been going down for quite a long time. A big profit potential was then found here, and yeah, we will be able to explain many trending phases. Here's another example. You can see after this downtrend, the market found a little bit of issues here at this point, driving through that. So the market was pausing a little bit. The sellers were not really interested anymore, or not strong enough. and then the market is slowly turning around. We are breaking here a previous swing high, we are making a new swing low, but this is also very interesting because here you can see the market is immediately running out of steam, so the buyers in this context are not really that interested, although this seems to be like a little bullish trend or a little bit of a rally. It never found real support from the buying powers, and then immediately the price moved to the downside and is continuing the trend. And another very interesting thing that you will often see is that the market really cares about those little swing highs and swing lows, especially after a turning period. So here we were in this uptrend, short-term uptrend period, then the market was selling off, changing the direction, and then we were coming back into this previous swing high. It is now tested and the market is really respecting it, and we will be able to identify those patterns later on to find very great trading entries. So there are usually 2 or 3 ways how we would enter such a trade. The first one would be here at a break of a previous swing low. So for example, in this uptrend, we would wait for a break of a previous swing low. Then on the here on the way up again, we are now short. We can look for short entries here during the duration of the trade, or even here, this is then again what we would call a pullback or a retest. So after the initiation of the breakout, the price comes back into the previous lows, and that's then also one thing that is a very effective pullback entry strategy that we will cover later as well. Here the same one happens again. The price is moving higher, we are breaking the previous swing low. Here's the first initiation, the first breakout signal to go short, and then once we come back, another pullback into such a market phase. And this is one thing that you will be able to find over and over again in all the pairs, and trending swing lows and swing highs are very, very important. It's one of the building blocks of all charting patterns and charting principles, as we will see in our later videos once again. Now we will get into the specifics of price action analysis, technical analysis, and we will look deeper into a price chart and try to understand what is going on here. And we have different tools and concepts that we can use. And in the first lesson, we will start out with the basics of support and resistance trading. And we will look at what support and resistance levels and zones are, and how they can help us to make sense of charts, and then later to improve the way we trade the markets. So support and resistance areas, they are usually the very important turning points at your charts, where price has shown a very clear reaction, and we can use that knowledge then in the future to time our trades. So let us just mark a few horizontal support and resistance areas, and then it will become clear what this actually is. So when you're just starting out, I suggest you grab the line tool here, horizontal line tool, and support and resistance areas are horizontal areas on your charts. And you can see, just look at the major swing points in your charts, swing lows, swing highs. And then you can often see that they fall in the same area. So we can see there is probably something here in this area. So let us just drop our chart or our line here, and let's zoom out a little bit here with this line graph, and you can see that here is some type of resistance. Price moved into it. Here we came a little bit short, so maybe we need another resistance area just below that. And that is a first good lesson that rarely we have just single lines as support and resistance, but more often than not we have zones where we have multiple support and resistance areas on top of each other, like we do here. And then we can explain price in a much better way. So you can see we have this swing high here. Here the first time we move back into the area, we see another reaction. We move back into the area. Now we see an earlier reaction. Here again, this time we see a very similar reaction at this price point. We sell off again. We move back into the area. This time we overshoot it. This is what we call a trap pattern or a squeeze, which is a very important pattern, and I will explain you the ins and outs and everything that you need to know later. And then after price overshot this level, we come back into this, and again we find new sellers, price sells off from it. So you can see this is what we call a resistance area, where price moves into a line from underneath. It finds new selling interest, people get interested in selling again. We don't have enough power to break above the level, and then we fall back down and we can initiate a short trade. On the other hand, if we look for support areas, they are levels where price moved into from above and then we turn higher again. So here in this area there's clearly some type of support, so we can see this stands out very well, and it also falls into this area. You can see here a little bit of an overreaction, but it's not too bad. So here we have a swing point here as well, and then here we have a very interesting pattern. You can see at this point we broke the level, we came back into it. If we adjust it for the highs, the lows here, then you can see we retested it. This is a flip zone where price uses the level previously as support. Now it is resistance like we saw here, and that is a flip zone, a very important pattern as well. And you can see how those concepts combine. Here you can also see another interesting flip pattern. You can see we have our level here. Let's mark it with a full line. Here we seem to have more or less like a zone at this point. We have some overreactions, but that's not a big problem. As I said, price is a very dynamic concept, and more often than not, when you draw support and resistance, you have multiple levels on top of each other. Like here you can see we have our support, then here another reaction again, here a little bit of a confluence or a reaction around that. We came back into it, have a very nice rally off of this level here. Then again here we just trade around a little bit, not much of a reaction. And now here, very interesting, price now uses this level as a very strong resistance. We come back into it here, we don't have enough power, we find new sellers, we drive price lower. Here again price moves into it, we sell off a little bit, we move into it deeper now and we sell off again. And you can see how we can use support and resistance and those flip zones very nicely in our trading. When we look deeper into price, we will also see that there are local structures where we just have individual swing highs and lows that we can use. You can see that here, very interesting. Let me mark that with a trend line, that is more obvious. You can see here we have a very short-term support area where price seems to have found some support here to the downside second time, and now when price comes back to it, there's a very high likelihood that we can find new buyers again, that price is not being able to break lower, and we can use that information. And if price breaks lower, then here is the second support area. You can see we have this swing low, and that started this rally, and so that is another very important pattern to have, another important level to have on your charts. And now when price moves lower into the levels, we can nicely estimate where it has a very high likelihood of turning around, and so we can use that with our other concepts and tools that we will learn in the later stages to form our trade ideas. Now when we look out, we can see that here seems to even be something like a zone. You can see that here is a lot of trading in that area. Let me mark that for you. You can see here we have some type of dip. Then here again a nice reaction, we came back into it 1 time, 2 times. If we adjust that to capture this high, you can see here another swing low, so we have 3 pushes into it. Every time we start a new rally, a short-term uptrend, here a larger one, so that is an important area to have on your charts. And even more interesting, this drop here after this very long downtrend, it found support at this area right here at the previous swing point. Very nice level. So if price falls lower, we can probably expect with a very high likelihood that price is going to find support here at this point, and we can then look for long opportunities for buying trades if we combine our other tools and concepts. And that is one way of using support and resistance, and later on I will show you even more ways how we can use that concept to time our trades, to find very important price points where we can then look for trading opportunities at those areas. And I hope that explains what support and resistance is. In the next video we will get into supply and demand, which is similar, but it is a little bit different, and it helps us to deepen our knowledge about price analysis and the way price moves in a much stronger way. And so we can step by step then build our knowledge about Forex trading and then eventually conquer the markets. Thank you for watching, and see you in the next video. So I want to take a little bit of extra time in this lesson to give you another video where we are taking a look at how to use support and resistance in the live markets, how to analyze a live market or a few pairs together, because I often see that traders struggle with either drawing too many lines and that they don't know what to do. It's called paralysis by analysis, where you have so many lines and so many things on your charts that you don't really know what to do anymore, where to get in, where to get out, which is the good line, which is the worst, the bad line. And there are many things that you can do wrong, but there are also a few things that will help you improve your support and resistance drawing. So the first important principle is that focus on the most recent price history. If you trade a 30-minute time frame, it is no need to zoom out for weeks and weeks or months even to look at what has price done in the past. What I like to do is just focus on the recent price action and look at where are the closest, most important levels. And here I try to look for the levels and the most important and the strongest turning points on our charts. So the price is currently here, and where do we see the next resistance area? For example, obviously it is just above the current price. We have a previous swing low here, swing high here. Here the price does not respect this level too much, but you can see here in this area there seemed to be a little bit of a like a support and resistance zone. So let me just quickly add here the rectangle pattern to my trading, and here you can see, let's try to see where do we get the rectangle, and we can adjust that a little bit so it's not too annoying on our chart. So here you can see where's the low, and it seems like we are right now in the middle of such a support and resistance zone. Here we do have some confluence, here, clearly some reactions here as well. So I would call them as well noise zones. So we don't enter right at a support and resistance level, especially later when you see trade examples or when we talk about trade entries. You will see that we don't enter right at a support and resistance area, but we wait for certain patterns and certain clues for entering at a market. And I would always recommend stay away from such noise zones. Wait for a clear breakout, maybe to the upside, wait for price to make a certain pattern to the downside. But when you see that you have such a big zone, then wait for a clear signal that the price is moving away. Very nicely we can later use patterns or a moving average to help us identify certain markets and certain signals. To the downside, we have here a very clear one here. I would say this is quite a nice one. You have this swing low area. Even we can extend it back to see, yes, there was a lot of confluence in this area. We do have a support here. We have some resistance here. You can see price is coming back into this level here. And let's see what is happening next time. Again, we are not going to enter right at a support and resistance level. Support and resistance is just a confluence concept where we can identify high impact price areas, significant price areas on our charts, where we then can, with the other tools and with the other signals that we will explore later, time our entries and find good entries. Then let's maybe look for another one to the upside. Here we do have a lot of resistance to the upside. This will be an important level when the price comes back into it. Maybe we can see something like a move back into the level, followed then by a move lower. This could then initiate a short, or let's just look at another one. Maybe the price is even breaking above that. In such a case, we can either try to trade a breakout, or we wait for a retest when the price is coming back into the level, testing it as support, and then moving higher. There are many ways how we can structure such a trade, as we will see later. But support and resistance, just as swing and lows, those are the building blocks of our charts, and we need to understand them so that we can lay a solid foundation. Here I have another support level to the downside, very important one. You can see this was the starting point of this huge uptrend here, so definitely something you need to have on your charts. And now we have a chart which looks okay, looks manageable. We have important price levels above and below the current price that we can deal with. And then when we use our other tools, we can find trades. Let's maybe look at two more examples. To the upside here, we have obviously a very clear double top. We have one resistance, two resistance points, very, very clear to the upside. Let's see what we have to the downside. And one rule of thumb is that I always like to use or look for very strong turning points. Those are usually good support and resistance areas. Even if maybe you only have one swing low here, if it is a very strong one, then it's still worth having on your charts. And another little tip, try to push the mouse wheel on your mouse, then you will see this crosshairs coming in, and it will help you also to estimate a little bit where do you have a little bit of confluence, where do you see, for example, here when we put a crosshair here, you can see here we have a little bit even more confluence, which is nice to see. So this is even a level that has worked in the past. If you see that the chart is always jumping back to the front, here is this little green triangle. If you push it or deactivate it, you can scroll back without having your chart jump all the time. Then here's another one that we should have on our charts, even though it's just one single swing low. It is a strong reaction point that we should definitely have on our charts. So we have two below current price. We can draw those here at the bottom, but price is still quite far away, so we should not worry too much. Then the question is, do we have another one here, maybe somewhere? There seem to be a level which is only respected some of the time. So you can see we have a swing high. If we make it a little bit lower, we capture this point. If we make it a little bit higher, we capture this point. But here we don't really care too much. This seems to be like a gap, probably a weekend here. We don't care too much here, a little bit here, maybe a little bit, but in the recent price action, not too much. So this level seems to be on and off. Sometimes the traders pay attention to it, sometimes not. So you can choose to avoid such patterns or such levels. You can also maybe have them on your charts, maybe give them even a lighter shade, so you have some color coding for yourself that you know, okay, the darker the better, the brighter, they are not as important. And now what do? We just wait for price to get there. If you are already maybe in a short, depending on the double top, this might be a good way of taking a profit, exiting your trade. If you are looking for a buy trade, maybe this one, or if the price does not respect this one, then wait for a push lower, and then we can maybe get a buy entry here. Or another setup scenario would be we wait for a break, then we wait, do we see a correction wave into the level, and if this retests hold or the pullback, then we can enter a short trade. Yes. So you can see the sense or the purpose of support and resistance is that they help us identify high impact price areas where we can either use them to enter trades based on certain patterns that we will explore later, or we can use them as well for our stop loss or take profit placement. Maybe one more chart and then I think it will become clear. We have here a current chart as well. So let's move this a little bit. And where do we have the current levels below current price? Here's probably one. Let's make this a little bit darker so we can see it better. Here we have one. You can see that here, this is where price is currently, and it seems to be finding even here a little bit of support. Let's talk about this in a moment. But let's see, this pattern or this level seems to be quite a strong one. Here, not too much, a little bit, we overshot it a little bit, so it becomes more like a zone. But you can see here, this seems to be quite an important one. And the price has found here support multiple times. Let's zoom in to see what we have above current price. Here, this one seems to be a very important one. We have resistance and a support. We use the crosshair, we can see not too much, a little bit of reactions. Here seems to be another not too important one. You can see, although price does pay attention to it, sometimes we don't see huge reactions except for here. This becomes a retest pullback. Here again, retest pullback. So this might be even interesting. What can we expect? Will the price get above that? Then it has done it previously 2 times, come back into it to retest it. So this would be a potential trade idea. It will take a while for price to get there, but it's just here an idea for how we can analyze the market. And what do we have here? Another thing that I would like to just briefly talk is the way the swing points and the trend waves move. So you can see we have our first major trend wave until here, very short correction wave. Again, it shows us already the sellers are much in control, very little corrective wave. Then we see another push, a little bit of a deeper wave, but the price is immediately falling back very strongly. You can see that here. Now we make another lower low, and this is quite interesting. So we can see the market is pushing into the level, and seems to be dominated by sellers. But again, we are not going to predict a turnaround. If you're looking for a short, wait for a break below that and see if it holds as a retest, as resistance, and then you can look for a short. If on the other hand we break above this point here, then it might signal a turnaround, because at this point the price seems to be shifting its direction, where we are then breaking above a previous high. So you can see we can already combine that a little bit, what we have learned. Although we are quite at the beginning, all the components will make sense together shortly, and just apply them to the live markets. Pull up a few charts, try to make sense of where do you have your current levels, where do you have problems, and you will see that it will become easier with time, with practice. It's all just a matter of experience. And yeah, just try your luck, see how it goes, and then I will see you in the next video, where we will talk about another concept called trend lines. So how did the last lesson go? Were you able to look at support and resistance maybe in a different way? Were you able to improve maybe the way you look at charts? Do you find that it helped for you? I hope it did. And now we will take a look at another concept or another tool. It's trend lines. And trend lines, as the name suggests, they describe trending phases. So here's the trend line tool. We have used it already to make sense of swing highs and lows. And a trend line is, for example, in an uptrending market, you look for at least 2 swing lows, you connect them, and then you try to find more connection points. So you can see that when we just extend this trend line, it seems to be quite nicely explaining the market. And the first rule is that in an uptrend you connect the lows, in a downtrend you would connect the highs, and then you can see we need 2 trend lines to start drawing a trend line. We need 2 touch points to swing lows, and then once we get our 3rd touch point, the trend line is confirmed, and this one has 4 and 5 touch points. So the general idea of a trend line is that you can use it in 2 ways. First, you look in an uptrend, you look for swing lows that really reach the trend line again. You trade that as a pullback. So you can see the market is going up, then you wait for a move lower. You see that the trend line is holding. We can even combine that. The previous swing low is holding, and then you can initiate another long entry to get into the trade. Here again, you can see it seems like even here, very nice confluence. You can see the previous swing high is acting now as support, very nice confluence, and here as well. And then another way of how traders would use a trend line is that they look for a break of a trend line. So for example, here at the top, you can see here the market is breaking the trend line. You've probably seen it. We are also making a new swing low. At this point, we have already made new swing highs, lower highs. So the trend direction was already shifting here a little bit. And then once the trend line is broken, it can give the signal that the market is rolling over from an uptrend to a downtrend. And then you can start looking for short trades based on the different signals that we will cover. Pullbacks are again another important one. You can see that. Oops, zoom back in. When a previous swing low turns into a resistance, for example, but we will also use moving averages later on. And then you can see we have this downtrend here, which then continues to the downside. And this is then how a trend line can be used for finding trend following trades, but also for finding those periods where the market is turning. Let's try to look at a few more examples. And here is an example of a so-called bump and run pattern. So you can see we have a nice slowly upwards moving market, and then suddenly the market just bumps higher. It takes off from this trend line, and the market is accelerating the trend direction. And then you can see we can even draw a new trend line. Oops, we should make that accurate. Starting from the swing low, and you can see how strong is this new trend line. You can see the angle is increasing significantly from a slowwards moving market with a slow trend line to a very fast higher moving trend line. And this is called a bump and run pattern because this market is moving so strongly that it becomes unsustainable, and then traders will look for reversal signals, look for ways to get short. You can see even before the trend line breaks, it often happens that you can see, or with the break of a trend line, that the swing highs and the lows are already shifting. So this is a very interesting confluence here together when we take highs and lows together with the trend lines. Maybe one more example. So you can see we have an uptrend. Let's see how we draw the trend line. And it is okay if the candle wicks here penetrate a trend line. That's not too bad as long as you don't have a full close below a trend line. It is still active. And then you can see we can find pullback entries into the direction of the trend. You can see here we have the first, the second touch point. Then we would wait, how do we get another one? In this case, we would try to add another confluence factor. So here we have a pullback, does not quite reach the trend line, but I'm pretty sure with other tools, this could have been identified as a pullback pattern. And then you can see, we can probably even draw another trend line here. You can see that we have a few snaps. So trend lines are not always going to work out on your charts. Not every trend will be able to, you will not be able to describe any trending phase with a trend line. That is totally fine. We have enough tools in our toolkit that we will explore so that you can make sense of almost all the market phases. So if you don't get a good trend line, don't force one. That is very, very important. If you don't have a trend line, just don't use one. Use the other tools that we are covering that you will learn. You can see here we have a nicer trend line, another bump and run pattern, 1-2 touch points, here the third one, and then the market takes off, makes the bump pattern. And here you can see at this point something is changing here in the market direction. We have our highest high here, then we have our second low here, and then once we break the trend line here, we can already see first we have a bump and run pattern, but you can also see that we are already making a lower high. Once we break this level here, you can say we are making a lower low. We come back into this level, make a pullback, and then start this huge sell-off. So this is a very nice example as well, how we can use trend lines here. Another one. We have a trend line, one touch point here, second touch point, then here we have another one here we come close. So there are ways how you can use a trend line to look for touch points, to look for pullbacks. And then you can see at this point we break the trend line, but just look at what happened previously. We can see before a trend line break, it already seemed like the market was turning here a little bit. So you can see the market was already making higher lows at this point, and then you can see we don't start a strong uptrend, but at least we were able to find a way how to exit if we were short here such a trade, when we see such clues that we not only see the market is making higher lows, but we also see the broken trend line. So multiple clues signal here the end of the trend, and then you can use your other tools. And then we have another pattern here, which we will cover in the next few videos, where we look at pattern trading. So if you want to get a little bit of a hang with using trend lines, I would again recommend pull up charts. Try to look for trend lines where they make sense. If you can't get a trend line on your charts, don't force it. Look at another way of looking or making sense of your trends by using highs and lows, support and resistance. Trend lines can be a great tool if you can draw them. If you feel like, oh, this is a little bit forced now, then step away, try to use another concept. We do have enough tools in our toolkit. And then I will see you in the next video.